Right, we're watching Alphabet, the parent of Google, and of course YouTube. The first video went on YouTube 20 years ago this week. Has that ever changed our lives? It's actually a great thing, YouTube. I love it for obscure documentaries. In any case, let's get more from Mike Vinokur, Portfolio Manager at Propellus Wealth Partners at IA Private Wealth. Thanks very much for sticking with us. Alphabet is the stock you'd buy with new money right now?
Absolutely. Alphabet encompasses what we like as a value manager. Great balance sheet, great free cash flow, lots of different verticals for revenue, lots of different verticals for growth, great capital allocation, reinitiated their big stock buyback, upped their dividend by 5%, and you're paying a below market multiple for a company that's got so many different moats in so many different businesses, and their businesses have very high margins, right? So we're not talking about a widget maker that, is producing at, say, an 8 or 10% margin. We're talking about a company that's much more capital light and producing very high returns on capital.
I mean, when you think about it, they've changed the way our brains work. Google search, YouTube.
Absolutely. But, you've got Waymo, you've got their Willow project.
What's that?
That's their quantum computing chip, whatever that is. You've got Google Maps. Chrome. Google Docs, is it?
Android.
Android.
You name it.
Yeah. I mean, so, when you talk about the ecosystem of Alphabet, plus whatever ventures that they don't even talk about because they're not big enough yet, but maybe they have a hand in, right? It's a really well-run company. I think Sundar Pichai has done a very good job. I think their new CFO is a very smart lady. I think their capital allocation framework is going to benefit shareholders in the long run. And, at this price, I think you're paying 15 times next year's earnings, maybe 15 and a half. They just reported last night, and, everybody was so worried about search and ad business. But, the reality is revenues were quite good, and the margins were quite good. So no complaints from us.
Parkland, there's a power struggle there. Simpson Oil, the biggest shareholder, wants to take over the board. You think the stock's a buy?
Yeah, the Parkland has world-class assets, and one may argue that they were, I'm not going to say mismanaged, I'll say perhaps not managed as efficiently as they otherwise could be. Perhaps capital allocation could have been a little bit better. But you're talking about an entity that provides something that we all still need. Great real estate, great locations, geographic diversification, high cash flow, recurring cash flow. And I think that if the management of the company was in better hands, they would be able to accrete a lot more value than what this current management has been able to do.
Fair amount of debt. I mean, they have a junk rating right now. I guess it's a pretty predictable business, though.
Yeah,
on the other side.
Yes, they do have a fair amount of debt, but they also have a fair amount of assets, against that debt. And then they're also spinning off quite a bit of EBITDA. I think the latest presentation called for the company to generate something in the order of $2 billion of EBITDA. So even if you've got debt of $5 or $6 billion, that's only a 3x multiple on a company that's got a lot of, hard assets, including a refinery, in BC, right? So lots of gas stations, lots of, refinery assets, lots of other logistics assets.
And then Citigroup, finally, you reckon this looks like a bargain when you compare the stock price with the book value?
Yeah, and not just book value. I'm talking tangible book value.
Oh, okay.
So the distinction is, people talk about book value, but that could be just an accounting number. I'm saying, based on their latest tangible book value, assuming it's right, because of course it could have, plus minus variations, but let's just assume for argument's sake that, the March 31st tangible book value of $90 is correct. That would mean that on March 31st, they could liquidate the whole business, right, for approximately $90, right? Net of all, preferred shares and debt and all of that. And so the stock's at 68. And then that doesn't account for the fact that you've got the brand, the recognizable brand of Citigroup, the real estate, you know, the client list, right? The relationships with, you know, all kinds of counterparties. I mean, they do a lot of fixed income trading and commodities trading and servicing of international clients all around the world. You've got a very robust capital level. I think Jane Fraser has done a very good job of, you know, streamlining the organization, cutting out costs. And even if we go into a slowdown, you know, when we go into the next upturn in the economy, I mean, we think this stock could earn $10 plus a share. So at $68, $69 with a 3 and change % dividend and lots of capital, we think it's pretty cheap.
Mike, thank you very much indeed.
Pleasure to be here.
Mike Vinokur has been our guest, portfolio manager of Propellus Wealth Partners with IA Private Wealth. And don't forget, stick with BNN Bloomberg on Monday evening for comprehensive coverage of the federal election.